and this will be the part 1 where I will be showcasing the inducement sweep entry module, which I'll be using it as the first entry module that I will be showcasing. Alright, so without further ado, let me dive into it. Alright, onto this chart, we can clearly see that we're in a downtrend and our range starts from this high all the way currently ending here. And let me hope that you know how I have identified this trading range, or just for the sake, let me just showcase. Alright, right here we say that we don't, or we confirm this one here to be a swing point after price takes out a high. I mean the recently formed value pullback, I mean the inducement. So this one here, is this the inducement? No, that's not the inducement. Why? Because that's not a value pullback. Coming up to this, is this here the inducement? No, that's not the inducement. Why? That's a minor inducement. It's engulfed inside this order flow right here. And so we said once that happens, then we usually pick the major, and right here you can see the major is the inducement. I mean that's the recently formed value pullback high. So that's the inducement. And right here you can see price reversed, took out the inducement, and obviously breaking past this. We said we confirmed this here to be a swing point after price actually makes it, or after price sweeps, grabs or breaks past the recently formed valid pullback. And right here price did that, and price reversed and broke past the swing point. So once this happens, this one here is a valid break of structure. I know you're asking, that's not. Why? Because this one here is not a valid, I mean that's not a break by a candle close. But this here, if you have been following up with the video course, you will, like, I know you know why I have picked this one here to be a valid break of structure, because this one here is the candle closure. I mean, even though this is the lowest point of the swing point, this one here is the swing point closure. And we said when you see a break by a candle close past our previous swing point closure, then that's a valid break of structure. And you can clearly see here price broke past our swing point closure, and once that happens, then this one here is a valid break of structure, even if price wicks, or even if price breaks past that lowest point by a week. So in this case, then I will confirm this one here to be a swing point. This one here, by the way, is not a valid pullback. That's not a valid pullback as well. And this one here is the inducement. So after price swept the inducement and broke past this confirmed swing point, then this one here is a valid break of structure. This one is our trading range high, and our trading range currently end here. We said immediately or right after identifying your trading range, the next step is usually marking your, your inducement on the range. So on this range, where is the inducement? The inducement is the recently formed value pullback. So this one here is the inducement. I know you're asking why I've picked this. This is the major. All of these are minors. They're engulfed inside this major pullback or major order flow. Like all of these, the ones that I'm marking, these are all minor pullbacks and should not be considered to be the major inducement, because actually you can see they are engulfed inside here. So all of those are minors, and this one here is the one left as the major, and we usually pick the major. So this one here is not the inducement, this one here as well not the inducement, and so this one here is the inducement. All right, so let me get rid of all these so that we can have a cleaner chart. Cleaner chart. So that's the inducement, and right now, all right, let me mark this, our trading range high and low. So that's our high of the trading range, and our low of the trading range is currently here. I will not confirm that to be a swing point low because the inducement is not taken out. Right, so now let me run price. I will not do anything on the range. I will not mark the POIs. I will not mark anything else apart from the inducement, because price may create another pullback to the downside, and we usually pick the recent as the inducement. So right now I just need price to take out this one here for me to consider. So if price breaks past the inducement, I will now be looking forward to mark the POIs. But if price sweeps the inducement, then now that's an entry module, and price can take a reversal from there. So let me run price and see what price does first before. Alright, and exactly right here, we can see that price swept or price wicked above the inducement and closed below this now. Alright, on the previous part, when I was showcasing about marking the order flows and order blocks, I said that once price breaks past the inducement, that's the perfect moment, or that's when now we start marking the order flows. But in this case, price has wicked. Price has just swept the inducement, and this inducement is a core liquidity on the range. So if price grabs that and showcases or gives a momentum that it's actually reversing, then there is a possibility that price will end up make that ultimate reversal, breaking the structure. And this one here will be a valid break of structure, and price will have made a new trading range. So in this case, then I will not start marking the order flows and the order blocks not until these sweeps gets violated, because there is no need for me to mark the order flows and the POIs, or I mean the order flows and the order blocks, if the sweep is still valid. And this means then the reversal also, the possible reversal also is still there, or there is still a possibility that price will make that ultimate reversal. All right, on our trading range, we can clearly see that this sweep is happening on the premium of our range, and this is something that we need to consider when using these entry modules. Like or actually this is something like it's a good practice to always buy in discount and sell in premium. So right here, in because we're in a bearish trend, and this here is the equilibrium of our trading range. Obviously above this 50% it's what we call the premium, and below this 50% is what we call the discount. In this case, we will be, you can see the sweep is happening on the premium, so we are selling in premium. And if let's say we were bullish, we will be buying in discount. By doing this, you will be increasing your win rate, even though a sweep even though without considering the premium and discount thing, you will still be spotting good trades. It's actually a good practice to consider the premium, I mean the selling premium and buying discount thing, because you may end up increasing your win rate without you knowing. And exactly right here, we can see price wicked above the inducement and closed below, signifying a bearish momentum, like signifying that the sellers have stepped in. And right now, to confirm that, I will need another candle, another bearish candle, to confirm the selling momentum, and then now I can take the entry. All right, so let me run price. Exactly right here, we can see that selling candle, signifying that the sellers have indeed stepped in into the market, and that's now the perfect moment to take the trade and target the external liquidity. The stop loss is usually advised to be placed like a few pips above the sweep, or if you want to take it aggressive, then now you can place exactly at that candle that swept, or exactly at the high of our sweeping candle, our liquidity sweeping candle. But for me, since I usually like taking things conservative, I will place it a few pips above, and obviously our stop loss, it will be exactly at the external liquidity. Some tend to increase this TP so that they can secure a higher risk to reward, but I usually like it as the script says, that place the stock, I mean the take profit on the external liquidity. All right, so in this case, then our sweep is confirmed right here after price wicked, showcased that, or gave that rejection, and price also gave another candle to signify that selling momentum. All right, now this is the perfect moment to take the sell. So let's say someone else will still have some hesitation and be like, this selling momentum is not strong. All right, that's good. Also, you can wait for price to print a significant number of selling candles before you place the entry. So let's say you don't take this entry, then you need to wait for price to print a significant number of selling candle before you place the entry. But make sure that our high, our sweeping high, is maintained. Right, so right now, right here, I'll be waiting for price to print a significant number of candles, and you can see right now here price has printed that selling candle, and on top of that it printed a gravestone doji candle, signifying an even better, stronger momentum to the downside. So now right here, this is the perfect moment with no doubt to enter into the market. So exactly right here, you can place your sell position, stop loss at the high of that sweep, and of course target this external liquidity. Even though this will reduce your risk to reward, but it's a perfect practice because this gives you confidence, and also it gives you full momentum that price will eventually head towards your TP. Alright, so right now let me run price and see what price unfolds. And exactly right here, you can see price is heading onto our favor and it's printing candles, I mean bearish candles. Exactly right here, you can see that big bearish candle to the downside, signifying a selling momentum, and right now price made it out to the external liquidity very perfectly right there, securing a good risk reward of 3.87. But guys, this is something you need to note. This is happening on the same time frame. You can clearly see that this is the same time frame that I am actually using. I'm using the same time frame. I have not shifted to any other time frame. So make sure that the rejection is happening on the same time frame, and also take the entry based like a direct entry based on the same time frame. I'll be showcasing the same using multiple time frames, but it's not yet. I'll first need to showcase all the entry modules before I do that. Alright, so I believe you have enjoyed the part, so drop a like, and on the next part, of course, I'll be showcasing the second entry module, that is the decisional PY mitigation. And once I'm done with all the entry modules, that's when now I'll be showcasing how to enter based on the same entry modules, however using top-down analysis. So you guys drop a like and see you in the next part.